This conference will now be recorded.
Okay, we're going to call this meeting to order. Special Finance Committee for February 15th, and the clerk will please note the members present. We have a quorum. So, and I hope everybody got their agenda. Looking for a motion on the agenda, please.
Mr. Chairman, I move that we approve the agenda for the meeting, the Finance Committee meeting for Monday, February 13th, 3 p.m.
Second.
Okay, got a motion second. Any objections? Hearing none, we'll get started on the fiscal audit for the fiscal year. And if I ever had it, I don't have it today.
Got it, I'm sure.
Do I have it there? Well, I threw a bunch of stuff out. Too big to go in my binder.
Said the other day, don't throw
I
it
know.
away.
Sometimes I don't listen to what I say.
We are waiting to get this logged in.
Oh, okay. There it is.
Yeah, you got it.
Yay! I believe what I said. That's pretty good. There it is. Okay, send that back to wherever it goes.
See him because it came on as G again.
Every once in a while I get lucky. Who are we waiting for to log in?
The auditor.
Oh. Okay.
Can you mute yourself?
Miss Rita, go up and start rearranging the furniture.
Well, you know I'm claustrophobic, buddy. Councilor Corn.
Here's the down.
See how nice I am to you, Rita?
You're always nice.
Bobby, she's more like my brother.
Councilor Camp.
I'm nice to Rita. I just growl at her a lot.
I'll bring punch to you tomorrow.
Thank you. Waiting for the auditor to sign in. Okay.
Today is.
Jason? Capital project?
It's in our packet, I do. If I don't, it's not in the packet, I do not.
It just hot off the press, huh?
Did they vote on it? That's what we requested.
I requested it. Now everybody's going to see it. We're not going to do anything with it.
I'm saying, when do they vote on it?
Last night, it's things that I
This year, see,
Oh.
we got some things expired.
That's what I thought. He didn't think he was very funny, but he was understanding.
I hate. Here.
Israel's company. I'm here to be company today.
Yeah. Oh, Bob, I'm not very good. Yeah, she's sick. And I don't like it when she's got.
Oh, me too. Trade places with Leanna.
Yes.
I'm not gonna play the middleman here.
Yeah, you
I'm not gonna
gotta
play the middleman.
get ready to kick him. and then kick me and, well, fine. If you're not willing to do that, then.
Sit in that seat.
Volunteer.
Okay,
Are we on the correct?
waiting for the auditor to
Happened before.
chime in, I
They
think.
signed in on the wrong meeting thing and I couldn't get on the meeting.
Oh, we're the right one. He was in the wrong link.
There's one right there.
Isn't it funny how old employees come back to work and then they make a grand entrance like that and wave at everybody? And they kind of,
It's like a parade.
I know.
That's wrong.
Rita came to a offer, just put Rita Kate on there.
I put her already.
Before he gets on, I hope everybody read this audit report front to back.
They're finance. You would.
But the first part's got to be done. Who's going to do it?
Well, that's the thing. I don't know.
Agree. I've already made that sentiment
I
known.
know you have, that's why I'm including you.
Can we blame Jennifer for all this?
Why not? Everybody else is.
She could handle it.
She can handle it. Oh, I think she's getting her, I think she's pulling her hair out.
He can handle it.
Okay.
She's seasoned that. Like Burris, give it to Burris.
Yeah.
Jim can handle anything. Nothing scares him. Maybe there's one thing that scares you.
You.
Not driving around?
I'm on the rest of this week.
You didn't walk over today, did you?
Had heard that.
Drove in some
Yeah.
in
Did your husband leave yesterday?
the morning.
That's informational work.
There he is.
See there?
Yeah, he's there.
Yes.
Okay, all right, we got the auditor. Let's listen to him, see what he,
Well, Chris?
Well, that's one.
Chris, you there? Curtis, Chris, I don't know, I can't see either way, Chris.
Green dot.
I say put them on speakerphone or somebody's cell phone.
Chris, can you hear us?
He says he can't hear us.
You know what he can do? Because I've done that when it has a problem, just have him call, just where he can hear on the phone and then he'll be able to see on the computer. Because it's a setting on the computer. He has to accept his speakers.
Technical difficulties.
Ask if someone else can hear us. Vicky, can you hear us, or Judge Seskey, can you hear us?
Unmute Judge or. Judge, can you hear us?
Yes, I can. Can you hear me?
Yes, thank you.
We're just testing our microphones. Thank you.
Thank you, sir.
Yeah, there's.
Yes,
there's a
this
On
is
the,
Vicky. I can hear you also.
that.
Thank you all. Maybe on his end.
Maybe he needs to reboot and come back in.
He's gonna call in
Okay,
and then he'll be on the screen as well.
okay. You're getting the last empty seat, Counselor. Oh,
Did they give you one?
Please enter your access code followed by the pound or.
Chris, can you hear us?
To enable audio controls,
Go ahead and
please
mute him.
enter your audio PIN followed by the pound or hash sign. If you do not have a PIN, just press pound or hash.
yeah.
This conference will now be recorded.
And
You know, back when
this goes with what he just handed you.
they talked about
Those documents go together. I printed off the latest and greatest version.
you know, when we're going to college, hash meant something entirely different.
Well,
Nobody hear you, and we should be able to hear him if he talks.
Can you hear me now?
Yes.
Yes.
Okay.
Just pay attention. Go ahead. Welcome.
Thank you. Sorry about that. I'm not sure what's going on, but what I have here is a presentation, which is some of the highlights from the exit conference that we did back in, I want to say November or October. And I've just taken some of the highlights of that and then added a few financial graphs that at the very end we'll go over. But I just am going to go over some of the highlights of the required communication that we as auditors are to make. So yeah, if you'll go to the next slide. Now, the first required communication that we'll talk about is, the report that we will be issuing. And so, or that we issued an unmodified opinion, or as you can see there in brackets, a clean opinion. And our financial statement, or our opinion states that the financial statements are fairly presented in accordance with the standards that we as auditors have to follow. And so, in essence, this is the highest level of assurance that we as auditors can give. So this is exactly the report, the opinion that the city wants to receive. So again, I put clean opinion in there just to make sure that it's understood that that is the type of report that you want to receive. If we go to the next slide. In New Mexico, the state auditor requires us to do what we call a yellow book audit, and that's that one on the left-hand side. With a yellow book audit, we have to look at internal controls a little bit differently. With just regular auditing standards require that we just take one transaction from each significant cycle and test that transaction and walk it through the system. Well, the New Mexico state auditor wants us to actually test internal controls. So the state audit rule has all audits conducted in our state follow the yellow book. So what that means is we have to actually pick samples, test internal controls, and then what we do is we issue that report, the yellow book report, in your financial statements. And what that yellow book report does, it does not give an opinion on internal controls, but it spells out how we pick samples and how we test internal controls above and beyond what regular auditing standards require that we do. And in that report, we do talk about our testing and then the results of it. And if we have findings, we have to report those. And we do have 7 findings. In New Mexico, the state auditor really takes those findings, the threshold for those, down to the ground level. So the yellow book standards have a certain requirement, what we call a significant deficiency. Only those in accordance with the yellow book have to be reported. But again, in New Mexico, the state auditor requires us to take that down to the ground level and report any and all findings. So we'll talk about the findings here at the very end. The next, on the right-hand side, is what we call a single audit. because the city spends more than $750,000 of federal funds, the city is subject to a single audit. And what happens is we take those federal grants and we look at the compliance requirements that are applicable to the various grants, and we test those for compliance with what the federal government is spelling out that the city does. With that, we do issue an opinion, and we are issuing an unmodified opinion, so the same type of opinion that we issued for the financial statements. We could potentially have findings related to that single audit, and we did not have any findings related to our testing of the single audit. So we issued, again, an unmodified opinion, a clean opinion, and exactly what the city wants to receive. So if we go to the next slide. Auditing standards really want us to talk about, in essence, how your records are being maintained. And did we have any difficulties in performing the audit? And so we didn't, as far as the audit went, when we asked for support, for the most part, we do have a few findings that we'll talk about. For the most part, those records were kept in good order, and that information was able to give to us, and we got that in a timely manner and in good order. And so overall, the city is doing a good job with retaining your financial records and then presenting those to us as we go through the audit process. So there really was nothing that we would have to report to you. Overall, the audit went fairly smooth. Go to the next slide. This slide, the whole purpose in this is just to let council know how is your internal control structure and the processes and procedures that have been adopted by the city, how is it taking the transactions and recording them in the system so that when the council gets, and even the finance committee, as you get financial records, are there lots of adjustments that we as auditors have to make, therefore maybe causing you to have some questions when you're making financial decisions throughout the year. So we do have some audit adjustments, those related to year-end accruals. And all of those adjustments really are due to the fact that the state of New Mexico requires you to report to DFA on a methodology called cash basis accounting that really isn't an acceptable methodology based upon our auditing standards. And so really what the council and the finance committee, as far as adopting a budget and doing your quarterly reports that are sent to DFA, we did not have a single adjustment related to those reports. So what happens is you maintain your records on that basis. Your management actually gives us some adjustments for the year-end accruals that we go through and test, and then they have to be recorded so that we can give a clean opinion on the financial statements. So this is something that happens every year. And really, if you look at it, if I was on the council, the adjustments that were made don't affect at all the way that you present the budget and the way that you present to DFA when you do your quarterly reporting. So what this tells council and finance is that we did not have a single adjustment with how you are looking at the numbers throughout the year, and that should give you some confidence in the numbers that your structure is working, that the numbers are getting accurately reported and submitted to you as you make your financial decisions throughout the year. We go to the next slide. We're going to talk about the findings. As I mentioned earlier, in New Mexico, the state auditor has taken that threshold of findings and put it at the ground level. So some of these findings do not meet the Yellow Book standards, in the standards that we have to follow to complete this. But again, in New Mexico, the state auditor really wants transparency and wants these findings to be discussed and included in audits, whether it's a significant deficiency or not. And so all findings that we come across in performing the audit are included here. So the very first one is cash disbursements. And so during our testing of internal controls over cash disbursements, we had 2 out of 27 transactions where the purchase order was dated after the invoice. And so we had 1 transaction in the airport and 1 transaction in the landfill. And so, that's kind of in reverse. Those purchase orders need to be done up front. giving authorization for those transactions, and they weren't completed until after the transaction was entered into. We also had one transaction for $577
Transaction were they
that
done?
related. I'm sorry.
Go ahead.
Okay. I thought somebody had a question. We have one transaction where for $577 related to the golf department, where there was actually no purchase order that was completed for that transaction. So again, purchase orders are required and are supposed to be completed, and it wasn't in accordance with the city policies. The next finding is 22002 related to internal control over the convention center. When we went out and we did some special testing at the convention center cash receipts, it was determined that the cash drawers that are being maintained at the convention center don't have unique keys. And so when an event happens and you've got multiple cash drawers being handled throughout the event, really those cash drawers are not being secured. Anybody who has a key can get into any particular cash drawer, and so we feel that those cash drawers should have unique keys so that only one individual has access to that cash drawer. The other thing we found was that cash receipts reports during events are being maintained. However, when it's non-event transactions are going through your system, those cash receipt reports are not being maintained. So we feel that there really wasn't good support when the money's being sent over and getting deposited, there really was not a detailed listing of what those transactions were. I mean, there's a system that's already established, and we feel that whether there's an event or not, all of those cash receipts should be entered into the system so that records can be maintained over what the cash receipts are and what the deposits relate to. The other thing over in the convention center, they have their own separate bank account that's not getting reconciled. And so we're recommending that bank reconciliation be done on a monthly basis close to the end of the month. The next one is retiree health care payments. During our testing, it was noted that there were late fees that totaled a little over $18,000, almost $19,000, due to the fact that those payments were not being submitted to the state timely. And so processes just need to be established to ensure that those payments are getting to the state in a timely manner. The next one is controls over payroll. Out of our 25 payroll transactions that we tested, there was one personnel file that did not have an I-9, and that I-9 could not be located. And so, again, all the I-9 should be in all the personnel files to ensure that we're following the IRS compliance requirements. The next one is timely deposits. So the New Mexico State Auditor changed this rule probably 2 or 3 years ago. It used to be interpreted that this rule only applied to school districts. The state auditor sent out a memo asking auditors and also municipalities to make sure that this law was being followed, to ensure that deposits are getting to the bank within 24 hours. And so what happens is the money comes into the city. By state law, it is required to be deposited within 24 hours. And we had quite a few exceptions in quite a few different departments. I think there's 11 different departments that was not being done. And so those departments, all departments need to ensure that the money is getting into the bank within 24 hours of collection. And there is, if it's a weekend when the banks are not open, there is an exception for that. But again, even with that, there were quite a few deposits that were made throughout the city that were more than the 24-hour period. The next finding is filing of tax returns and employee benefits. And so during our testing, it was noted that 941, so the payroll reports, that are submitted to the federal government were not done accurately, and there was late payments assessed of a little under $49,000. And then we also had late health insurance premiums that we noted. There was about $17,000 of past due amounts that had not been sent to the state that needed to be. And so again, just making sure that those get paid timely needs to happen. And then the last finding, 22007, relates to a conflict of interest. There was an employee that used their credit card to pay a business that was owned by the employee's spouse. And so, you know, when you have a relationship like that, somebody else needs to be involved. And so that particular employee should not have been making those payments to the related party. And so again, you know, we need to just make sure that everybody in the city is made aware of when we have a conflict of interest, that they're not entering into those transactions, and that you know, they have somebody else, they recuse themselves from any of those types of transactions. So if we go to the next slide. Last year, we did have one finding that related to municipal courts and as far as segregation of duties. And based upon our testing, that issue has been resolved and was removed from the audit this year. And so the segregation of duty issues at the courts, they did implement policies and procedures to ensure that those breakdown and controls were taken care of. So that particular finding was resolved this year and removed from the audit. So if we go to the next slide, we've got the financial highlights that we'll go through. So if we go to the next one, the first few slides, actually the first two slides. So we talked a little bit about how council adopts a budget on a cash basis, how you report to DFA on a cash basis, which is not under the methodologies that's accepted under what we call GAAP, or generally accepted accounting principles. So what happens is those numbers have to be converted to two different types of accounting. And so this first type that we're going to talk about, the first two slides, are what we call full accrual accounting, meaning that, as we talk about at the very top there, the long-term assets are included, things like capital assets with your buildings, equipment, streets, etc. And then your long-term liabilities are included in those particular financial statements, where you have your debt, compensated assets, your portion of para, things like that are actually included. So all the different funds of the city are basically put into two columns. We have the governmental activities, which includes all your governmental funds, like the general fund and all your special revenue funds. Those get combined and then put on the full accrual, so where we have those long-term assets and long-term liabilities. And then your business type activities, all three enterprise, get combined into one column in your financial statements. And so this full accrual accounting is really just 4 pages in the audit report. The first 4 pages where the numbers are included. And so I've got some graphs kind of going over those. We go to the next page. As you can see, now this is just your governmental activities, so like your general fund, your special revenue funds. Those are all combined into one. Over the last 3 years, they've remained fairly consistent, but the city ended up in fiscal year 2022 with $142 million in assets, $122 million in liabilities, and then what we call net position or equity of the city at this level of accounting was about $20 million. And so that again is all your governmental activities. If we go to the next page, your business type activities again remain fairly consistent between years, but this is those 3 business type activity funds get combined into one column. And so we ended up the year with 153 million in assets, $57 million in liabilities, and then 96 million in equity in that particular financial statement. And so that was the end of the results of the full accrual. The only time you'll see these numbers is audit time. Otherwise, the way you maintain your records, you won't see these types of assets and liabilities recorded on your internal records and how you report to DFA, and also, again, how you report for your budgetary basis. We go to the next slide. It talks about your governmental funds. So in these financial statements, we do present separately each individual fund. And in these financial statements, those long-term assets that we just talked about, liabilities, with your buildings, equipment, and those type of things, they're not included as assets. And then in receivables, you only have those amounts that are collected within 60 days. And so if you were to buy, let's say, a whole new town hall for the city, and that transaction was just throw out a number of $10 million to build something like that, what would happen is in these financial statements, you don't have that long-term asset. So what happens is the money goes out, and then you have an expenditure. And so you expense those types of transactions. They are not included on your balance sheet as an asset. The same thing happens with your liabilities. We do not have long-term liabilities such as notes payable. So in this methodology of accounting, bond proceeds and debt proceeds are included as revenue, or what we call other financing sources. And then the bond payments and, again, purchase of capital assets, those things are expenses on those particular financial statements. So when we have a long-term asset that we're buying, or we have a long-term liability that we're incurring, they show up on the income statement and not as a part of your balance sheet. And so it's a little bit different methodology of accounting than your budgetary basis is, but it's a lot closer to that basis than the full accrual we just talked about. So if we go to the next slide, I've included a few slides on the general fund. Since the general fund is the general operating fund of the city, I thought we would talk about those. So this year, at the end of the year, assets in the general fund were 22 million, liabilities were 3 million, and you have fund balance. Again, that's your equity in the general fund of $19 million. We go to the next slide. That composition of your assets, the amounts we just looked at, the 22 million, almost 23 million of assets. Most of that is comprised of cash and investments, 17.4 million, and then accounts receivable of 5.2 million. And then you have some smaller items, some inventory and other items of about $200,000. So we saw on the previous slide that your assets did decrease. The biggest component of that decrease related to cash of approximately $5 million during the current year. We go to the next slide, liabilities. So you ended up with about 3.3 million in liabilities in the general fund. Most of it relates to 2.1 related to accounts payable. And actually, I've got the wrong number on there. It actually should have been a little bit over 7 million, because we have deferred leases. That is a new concept that was implemented this year. So accounting standards now require that leases get recorded. So when the city, for things like out at the airport, when you have hangars or different items where you're leasing, we now have a new asset, and we also have now a new, what we call a deferred lease liability. So they kind of offset each other. Your assets and liabilities are going to be the same amount. So we do have, because of the implementation of those accounting standards, we did have to go up and change those. And so when you take into consideration, you take out the new lease liability that we had to take into account for this year, Your your liabilities went up approximately $1 million. And a lot of that was really just due to the timing of things like accounts payable. That was really the biggest change that we had this year. So if we go to the next slide, here's your general fund revenues. As you can see, most of the general fund revenues have remained fairly consistent over the last few years. Your biggest portion of revenues are your taxes, which relate to GRT, property taxes, motor vehicle taxes. So all those have remained fairly consistent between the last 2 years. And then your intergovernmental or grants, your fee income and other income have remained fairly consistent, about $1 million. In 2021, you have a little bit of an increase for that 1 year, which related to some special state appropriations that the city received in 2021. But other than that, it's remained fairly consistent. We go down to expenditures. This is the last slide that we have. Your expenditures have increased a little bit. They've gone up about $4 million from FY21 and about $3 million from FY20. The majority of this relates to the increase in additional public safety salaries and then the related benefits also that were paid out. And then you'll see that yellow amount had been zero in the prior years related to public safety. That amount was increased this year based upon how the city was accounting for that. So the city made a determination to move some of the public works of about $1.3 million that related to engineering that had previously been reported in the capital improvement fund. And so that has been moved over now to the general fund. So that is really the biggest increase, outside of just your general government spending for public safety. We'll go to the next slide. I think I'll just open up for any questions that anybody might have.
Anybody got any questions? Mayor? Got any questions?
You're welcome, Larry.
Okay. Any questions from our team members? Okay.
No, these findings, we just need to make sure that those don't reappear. Yes, sir. They were here for, the one was a Tyler problem, it looked like. And so that we make sure that we have all of those cleaned up. And, we paid $60-some thousand in penalties during the 22 year that hopefully we'll never see again. So.
We will, though. We paid some penalties and we know of some penalties that are coming through this fiscal year.
What have we done to stop that?
Right now, we're still cleaning up Tyler, and like I said, we've been budgeting each month with the Mexico retiree, with the help of finance, make sure our payroll accounts are budgeting. But there are some issues that are coming up still from the Tyler conversion that are still coming back. We haven't got a full amount from IRS yet.
IRS is behind on their.
They'll catch up.
Yeah.
And so.
We haven't seen that yet.
I just noticed that we're starting to see a bunch of stuff start coming through now. They're questioning as well. So.
Yeah, I don't want you all to leave here thinking that we're done because we know we're.
Just as long as we address these and, Mr. Chairman, when we see items called material weakness, that's not a good thing. And I will also bring it to your attention that Chris talked about on these timely cash deposits, that at the golf course, if you take their testing, 6 out of 6 transactions, that means 100% of our deposits are not being timely done over there. And at the convention center, 3 out of 7, that's a high percentage that are not being done. And I would hope that that has been attended to and is understood that that's not acceptable. That's not our rule, that's the state's rules. And that we've taken every precaution to make sure that those go away. Because what happens, and I think Chris would attest to it, I'm not saying anybody does, but it says here the effect of that provides an opportunity. And if you let the opportunity go away, then you don't have a problem. So I would hope that the golf course is well understood that they're going to the bank every day.
Council, we're putting in a new point of sale so we can get our reports quicker. There's a credit card receipts from Canada.
And the convention center is the largest dollar amount of 28,000. So
And I think that's gotten better with Justin here.
yeah, good. Thank you, Jess. Thanks. Okay. Any further, council?
Anybody else? Hearing nothing? Chris, thank you.
Okay, thank you very much. Appreciate it.
Chris, saying you get to do this one more time, though. You know that.
Yeah, I'm fine with that. And Janie was going to ask, I'm not sure if he's already, and I might be jumping the gun, but I'm not, I changed up the presentation a little bit. If you want to add or delete what I've gone over here, just let me know. We've already met the required communication that we have to make. So I just tried adding a little bit of graphs maybe to help council a little bit and kind of see the financial picture. But if you want, Ed, you want to call me and have any suggestions, I'm open to any changes.
Okay. We got your phone number.
Okay, thank you so much. Appreciate it.
Thank you, sir.
Thanks, Chris.
All right, bye-bye.
Not in good achieving. Yes, and yes. Yes, we'll open it next.
Okay. Proceed on a mid-year. All right, Danny, you're on the hot seat now.
This is the actual financial statements that are in your packets. It's a little bit overwhelming. So I've done a summary that was also put in your packet, but I handed you a summary of the summary today, which is really just looking at numbers. So what I'm going to go through is slowly through each one of the funds, and any questions you have, anything you want to talk about, no. My ultimate goal is that you understand where we're at with cash balances, because we're looking at starting our budget process, and the cash balances are not the same cash balances that we went into this budget. So we can't even at this point have the same budget that we have. And because us finance people are very black and white, it's going to be very blunt in what you're looking at. So I provided balance sheets and income statements for all the city funds. I'm not going to go into a lot of detail, especially on any of the grants, because they are income and expense match, most of them. If you look at the balance sheets, I've gone in there and pulled the cash, which is pooled cash for most of them. We do have some funds that have restricted cash, but I pulled that to the side. One of the reports in your packet also lists all of the open POs out there, and they go back 3 years. So if right now, when you look at this, revenue staying consistent and expenses staying consistent, this would be a good cash balance at year end. So I went in, and so our ending cash balance is 15 million on here. Then on the summary that I gave you today, I went in and added in like the additional GRT for general fund that we know we're going to get in. above budget in particular. And then Chanel has done a correction because in my summary report, I talk about that in doing this, I found some discrepancies in how we were doing the GRT. So we went in and did a correction on that. The correction does not post until January. So I went ahead and included it because it's not in the numbers that you're seeing because these reports are through December. So if I take the cash balance of 16 million, I add in another 2 million for the additional GRT that we're going to get in the general fund that we're anticipating this year. I take out the 753,000 for the correction. And then I start listing all of the open POs that you see there. I go in and list the departments that I believe in projecting them out are going to have a negative cash balance that we know we're going to have to true up. Anybody in the general fund that put in a budget adjustment, I put that in here. We pulled the budget adjustment off of the meeting today because I want you all to really look at this before you approve a budget adjustment going through because we don't have the money ultimately. I also pulled in any of the interest for the loan payments that we have that are due this year. Most of them are just interest. I pulled in the 7 new positions for a half a year for animal control. I did the parks budget adjustment. I did a budget adjustment for IT. I've included a half a year of the special audit for 100,000. Thinking it's going to maybe run 200,000, 250,000. I think the most they could spend this year would be 100,000. So I've added that in there. And it gives us an additional $3.2 million as a reduction from that general fund of 16 million. We have some other funds that are going to have a shortfall, museum, zoo, and golf. The 70/30s we know aren't going to meet the revenue requirements that are in the budget out there. Corrections, I think, is also going to be short, and roads, I believe, is going to be short. So when I add all of those together, that's another $5.2 million reduction. So it's leaving us a general fund cash balance of 9.3 million. And we started this budget at 17 million, 17.4.
$8 million.
Pardon me?
$8 million reduction. Yeah, just, you ready for a question?
Yeah.
So you took the 16 million as of 12/31, is that correct?
Yes.
And so you've added in your, what you believe are additional GRTs are going to be 2 million for the over our original projection.
Well, because the what is already included in there is, where is that at? A million, no, 2.9 million additional GRT above budget. So I think GRT is going to come in at about close to 5 million above budget for general fund.
For the full year.
For the full year.
Yeah, I had it a little higher than that, but.
Well, and
not just.
Yeah.
When you got to peel off the dedicated GRTs.
Yeah, and I've done that. So it's going to be higher than 5 million, but 5 million.
Take the total, but.
Yeah.
Those are dedicated funds, so it's, the general fund is really going to be 5.
Yes.
I buy that. So, because I went through that and exercised just in total, and I agree with you where we're at with what the shortfalls, with what the revenue side is going to be. The items that I had for a shortfall, you're a little higher than I am, but that's okay because, but I do have a question for you. And I went through your budget pretty extensively where we're at for the first 6 months, and I got pages marked, and I could keep us all till 2 o'clock in the morning questions, but I'm not going to do that. But I'm concerned about these fund shortfalls. And I came up, or very similar to the museum, very similar to your zoo number, very similar to your golf. The one I didn't have and I missed is corrections. Is that our fee that we're paying? What is that? Is that the fee that we're paying to the county?
Yes. And right now, I believe the open PO is 600,000. But the revenue, we're not bringing in that amount of revenue. So we've always supported that with the general fund transfer.
Right. Did we not have a fund sitting there prior? Do we not have a fund sitting there for what I call the detention fee?
Yeah. Yeah.
We've gone through that, or we will go through that a number that we had sitting there at the beginning of the year and still be $200,000 short.
There's a fund, if you want to scroll over to the corrections.
That's that one, the other day when I went through there.
I did too. Well,
Keep going
reason why you and I differed,
after recreation.
discussion.
Yeah. Well, the other one I missed is the roads.
Yeah.
Well, and roads, I sort of want to talk about, but
So what did we have as a beginning number in there?
go down some. So for income this year, we've only brought in for the half of year.
Right.
$15,000.
What did we budget?
453,000, but
We've only-
430,000 of that is the transfer in from general fund.
Yeah.
That's the part I want you all to see is we've not done that yet.
Right.
We've not done any transfers except what we've had to do to keep our DFA report from going negative in cash.
Correct.
So we've not done those transfers, but you're going to see it. And because these reports are based on actuals and not budget, that's why I've included it in there. And I expect, is he here? Was he here?
I think he's on the phone.
Okay, I knew I saw his name somewhere. And I expect them to collect more, but I think they're going to be short.
Oh, yeah.
So I never know what they're going to actually spend. The 600,000 could be too much, but we just don't know that at this point.
No.
Yeah, I missed the road. I didn't.
Well, and roads, whatever is going to be reimbursed, we need to get on that. Lorenzo and I looked at the water line, the Edgewood water line, and Lewis requested reimbursement for that on December 14th. We didn't actually get that money until February 2nd. So the lead time to get reimbursed is there. I think there's money out there. I'm not sure we're going to get it this year. And so we need to be turning those around a lot quicker.
It needs to be a priority. How you make it a priority, I don't know, but it needs to be a priority.
I think it'll get a little better because I think the folks in Santa Fe are starting to work from the office more, which will help. But that's, too long. That's 6 weeks.
Do you have any idea what we have out there and potential reimbursements could reduce these numbers?
No. Roads and the airport are my big black holes because I don't know where they're at in that process and we don't have a good way of monitoring that.
Would you know what you're asking for reimbursements of water?
Yes, I do.
Does she know that?
Yes, I spoke to Jane the other day. We have, I have receipts right here.
Well, but we had misplaced some of it because I think, was it you, Councilor Corn, that had asked me about or was it one of you had asked me about the reimbursements? And so, Lorenzo and I got.
Last year, when the budget got busted at the end of the year with all of those, we said, wait a minute, where's the reimbursements? Where are they coming from? And we've asked and asked and asked.
Right.
The Edgewood water line is $992,000, but it took us 6 weeks to get that check from them.
We just now have it.
That one is actually the It's East water line realignment out at Dare Center. So we got full 100% reimbursement for the Mountain View water line project,
Okay.
which was a total of $617,517 for that one. And then Edgewood water line, we've got reimbursed for only $88,317 because that project already started. That was delayed because of the North Atkinson water line project and the road project. But it is expected to be completed by the end of March. Then we'll request reimbursement for that. The East water line realignment, we've got reimbursements of $992,180 up to date now. So we're still short about close to almost $1 million, probably $900,000 on that project.
And have we expended that?
No, not the full amount. But that's the one that we're reimbursing, getting reimbursement from the county. That was that state $2 million funding that they requested that we're getting, that's providing the funding for that water line project. We have almost $1 million reimbursement on that one. And we will request the other one as we go through the phases.
We haven't expended that money yet.
No, we haven't.
So what I'm looking for,
Well,
what we've
it's
expended.
covered in the actual deal right now. So it is kind of expended.
Well, what we're looking at here are actual numbers. So it is part of your open PO that I have when we get to you, that I will have listed.
Counselor, just if you recall in your finance committee packet or in the PowerPoint, one of the slides that I presented was what was our total capital in the budget, how much was actually collected in revenue, what was expended, and then also what was outstanding POs. On some of those projects that are tied with grants, we have, obviously we have to expend and then we submit for reimbursements. Right now, some of the bigger projects are just not moving. For example, the wastewater, the loan.
The dewatering project.
That one, I believe, is still on hold, right? Has there been, what level of expenditures have occurred in that project?
I don't know the total amount. I can get that number for you. But
So some of those projects, they're not moving as fast as we thought they were going to move this fiscal year. So that's why you're not seeing those huge reimbursements coming in. They're really small reimbursements. And that's what usually we track is what is the level of expenses in the capital line item? And then we look back up into the revenue side and say, well, we're spending a lot on capital and some of those are grants and loans. Where's the revenue?
Right.
And that's what kind of starts flagging it. And then
Well, what flagged it for me, if you recall, at the end of the last fiscal year, you were projected to be $4 million positive in the water fund. And a statement was made that we had a lot of repairs, but we were going to get a lot of reimbursements for.
That's right.
And we went from $4 million plus to $1.3 million negative. And I haven't seen anybody show me where all those reimbursements are coming from. I was just told we got a lot of those coming through. Where have we seen it? I haven't seen a schedule which shows what we should have gotten out of that money we spent, out of that $4 million that disappeared. That said it was used for the water fund. Was it not reimbursements?
All of the line breaks you had and none of those were reimbursable,
right, a
right?
lot of it wasn't reimbursable.
I was told we had a lot of reimbursements coming.
Not from that 4 million.
So that was not a true statement. Thank you. I see my time is.
Got something to say, Mayor?
For the rest of this year, this probably won't affect us too much, but somewhere in there, I know there's supposedly our insurance bills going up for buildings over $1.5 million. When the next cycle, when we get bills from the insurance, there's $2 million in here for roofs that we got paid for that we didn't spend on the roofs repair. So that's $2 million somewhere we're going to have to eat at the airport. We got to fix them or else it screws up our insurance stuff. There's a bill in the legislature right now, that House Bill 367, that is Representative Harper. And supposedly this is a deal made in heaven up there between the parties that be to eliminate pyramiding, which is going to be at least between 1.7 and $2 million direct impact to us that we're not going to get. And so when you look at that, I mean, we're hoping to get some money up there, but to get us through where we're going now, this is a pretty big nut to cut. And for anybody that's got any overtime, you better start thinking about what you can do to shovel it down, because next year is going to be unbelievable. There won't be any balances left to do any of this stuff next year. And
we got to really watch any expenditures for last half of this fiscal year. We're not going to make this.
yeah, I mean,
Unless it's an emergency, we can't spend the money. We don't have it to spend.
you know, it's just frustrating to me, it's frustrating. If you got money for insurance repair, that money should have been line item put aside and set aside specifically for that project, rather than pushing it down the road into this year's budget like that. Because that just gives us, it's just a way that they pushed off onto us. We have an excess cash or a lot more cash to spend, rather than money that was totally committed that we're going to have to find from somewhere else. I mean, the way I see it, I mean, if we're going to have to fix the roof.
Well, and I've got that in here.
Well, you've got it flagged. I noticed, I saw it, but you know, it's.
Well, and I think you take what Chris said in the audit, general fund, cash went down $5 million. Expenses went up 4,
Yeah.
That's what happened in 22. So that's what we're seeing the repercussions of in 23.
So if you would go into, we went through these fund shortfalls, and those are basically because of the projected revenue side not being where it was budgeted. Like the museum is 642,000, you're projecting to be a shortfall. Is that because the revenues were not?
The revenue was added to the museum, but we knew they weren't going to make it. And, I understand setting goals and having goals out there, but in reality, us in the background need to be covering for that, because we knew it wasn't going to happen.
It's not realistic.
Right. And so it's in revenue for the museum, zoo, and golf, but it's not to cover it, didn't come out of general fund.
Right.
So now I'm covering.
Now it has to come out of general fund because those were unrealistic.
Well, you did half of it, but not the other half.
Right.
You knew that wasn't going to be there, but you didn't cover it with your cash.
So the museum, zoo, and golf shortfalls are because of a budget shortfall in revenues, not necessarily on the expenditure side.
Right.
So, and corrections is because of shortfall in revenues as well. So why don't you explain to us the roads?
The roads, we normally have a transfer from general fund to roads to cover part of the cost of the roads that we budget every year. And a portion of that comes from capital improvement fund, and a portion of it comes from general fund. Because I don't see the reimbursements coming in, I used what we budgeted as a shortfall for them. And when you look at roads, you will see that I think they're 2 million roads. 2 million in the whole right now. Go down.
Page it on, Jane.
Go down to
We still got some reimbursements out there. We just don't know how much they are.
all the way to the.
They are when they're
Where's
coming.
Mr. Nahar?
Huh?
Where's Mr. Nahar?
I don't know.
So see, we're 2.4 million short through December. So if everything stays the same and we bring in the same amount of money and we keep spending at the same level, we're going to be $2.5 million short. And that's why I covered $2.5 million.
But we suspect there's more reimbursement out there. We just don't know what it is.
Right. And we don't know unless they start trying to collect it now, come April, we might not get it in before the end of the fiscal year.
It may come in with next year's.
Yeah.
What is the process for reimbursement so they have an understanding of, Counselor Perry, do you have any knowledge?
Call to the state.
Huh?
Find out when the state's going to send a check or whoever.
But do we know that we've applied for everything and what we have hanging out there?
If you look at towards, sorry for speaking out of turn, Mr. Chairman.
Go ahead.
But, a lot of that depends on what the qualifications requirements are, how much you've spent out in order to get reimbursement, those kind of things. So, the fact of turning something in December, 6-week turnaround, that's just, in my world, sounds crazy. But
Again, I guess my question though really is, what have we turned in for reimbursement? Does anybody know that?
They would have to ask Chanel or I for the council checks, and we've not had a lot of requests for.
So you don't know what engineering has turned in for reimbursement? I think that's a very important question that needs to be answered.
We need to keep track of those.
That should be,
reimbursements.
anytime we're working on,
Are there deadlines on those?
could be, well, yeah. And so I would hope that we institute some form of process. I wish Mr. Nahar was here today, but he's not, that you work out some process with him so that you know
Right.
what project are you working on that's going to be reimbursable, so you know beforehand, and then you will know exactly what is to be reimbursed. It's like building your accounts receivable, even though we don't, for a cash basis taxpayer, we still need to know what we got our anticipated revenue to be.
Mr. Chair, if I may, I think one of the things that, with Elizabeth being on board, we're trying to standardize is that anybody who's administering a grant that has to be able to keep a spreadsheet tracking all of their expenses, but also all of their revenues. Because to answer your question, if you were to pick up a grant from the spreadsheet, we should be able to generate that spreadsheet and say, this is what we spent. And it should have that other column to tell you whether or not we applied for reimbursement or if we've gotten the reimbursement.
Right.
And I think right now that's the piece that we're missing is we're not consistent with that process. And we have some of that in our own files that we oversee. Elizabeth is the point of contact on some of the grants that are listed in here, and she keeps a detailed spreadsheet. But some of the other departments that oversee their individual grants, I think that's what we have to work on, is that information so that we can answer that question. Finance, that, as we're working towards the budget process, we start sending emails to those departments that have grants and ask them, where are you on the reimbursement, on the expense, because we need to account for that. But I think that's one of the things we have.
I think it's something that's very urgent that needs to be done, because finance, you're the reporter. After it's done is your job. And so, but we need to know. We, the council, I think management needs to know, what do we have coming in the door?
And when you look at the budget,
Because this number may not be that number.
Yeah. When you look at the budget, all of the capital projects that were taken into fiscal year 23 were all carryover projects.
Right, from 22.
Yeah, and that makes a difference. So if I look at the open POs and I know that we're not going to spend all of that this year, it would be nice to know what we're not going to spend.
Correct.
Because then I don't have to cover that. And that's the big black hole out there right now.
We can identify that liability and take it off the books. That could change this a bunch.
Yes.
It could make it worse too. I mean,
could.
There is that possibility.
Mr. Chairman, you just called one word: communication.
Oh, that's a novel idea. Well, we need to figure out a way to monitor this a heck of a lot closer than we are. That's clear. And if it takes 5 weeks, 8 weeks, whatever it is, to turn that around, we still need to know where that money is and how much we're expecting whenever it decides to show up. And if we got to bridge a budget year because it doesn't get here to July 10th, well, okay, but if we know about it, it's easy to handle. If you're just sitting there with an empty bag, that's hard to handle.
Yeah.
Sir.
Mr. Chair, I'll have a meeting this week with anybody that has a grant. And we'll find out where they're at on these grants and the reimbursements, where the project's at, and get you some answers.
Yeah, that'll be very helpful.
Chairman and councilors, they are at the state, they are, whenever I send in a notice of obligation or a request for payment, they don't respond quickly. I usually get them in about 3 weeks. Unless I have, we have somebody on the legislative side that we can call and they go pay a visit and have them push things quicker. But they're pretty slow right now. I was told that they were shorthanded. Some of them are now coming back to the office, but that's what I'm seeing right now when I'm turning in those notices of obligation and requests for payments.
Well, I mean, we can't go wake those people up. I got that, but I need to know that we've asked for the reimbursement and how much that is. And when I can't control, none of us in this room can control when that check's going to hit, but we have to know that it's on its way or should be on its way. We just know when we bill them, we don't have any control of the time that it's going to take for reimbursement. Now, if we got an issue with the county or the school district, we can probably get that rectified and turned around a little quicker, but we can't control reimbursements coming back from the state because they work on their own time schedule. I got that. But I don't even know, in any of these documents that I've seen, do I know how much we've actually sent the building off for? And that makes it really hard because potentially there's millions of dollars that are in that pipeline somewhere. And if we haven't done our part, then shame on us. But if we've done our part, then it's shame on them. Now, it doesn't give you any money to spend, but it makes me a little happier, Sir.
Mr. Chair, and that's what you see on these projects that are state appropriation money. If you look under there's the awarded amount, obviously that's the grant. Then the unobligated balance, that's the money left over that could be used for additional expenses. Then you see that next column, reimbursement to date. That's what we have actually received from these grants. So if there's an amount there, that means that's how much money we've received. If there's zero, that means that we have not submitted for any reimbursement. Now, it could be that some of them we may be waiting, and that information we can get you, but you can see there on some of them, especially those that are, when you turn the page and you see some of them, there are some of the newer ones. You can see, kind of get an idea of what the level of activity has been for some of those state appropriations. On the first page, I can tell you, I did get a call from Hubert Quintana this morning asking me about the first two, because there's a balance on Carpenter Park, which is already being corrected by Elizabeth, of $59,000. But in this report, it shows $6,000, but that was a correction that needed to happen because there was additional equipment that was purchased for Carpenter. And from the police department, we believe that one will be expended by the end of June 30th. So he asked about those two because one of the legislators was thinking about submitting for a reauthorization, but those can be expended. McBride Cemetery, that has already been submitted for reauthorization for 1 more year. And then the other projects are junior money. That junior money has to be spent by June 30th.
Yeah.
And so there is no reauthorization on those. And as you can see there, I know the police vehicle equipment, Elizabeth is working on that. Street repairs, I believe Lewis submitted for a $100,000 PO that the council approved. And then we have the zoo, which that money needs to be spent by that fiscal year. So this gives you an idea of all of the state appropriation money. But as as Mike stated, I think setting up a meeting with everybody to get a better idea of additional detailed information on all of these and those others that are not listed.
Well, we need to concentrate on these that on a real short fuse.
My invitation list to the meeting.
Okay. And then as soon as we get that one done, then we start on all these that are expiring in 24, because I don't want to get down 6 months from the end on these others and go, what are we doing?
These are only the state appropriations. There's others beyond the state appropriations that we're sitting around waiting for money on. This is just a small portion.
Well, no, I understand, and we've got to stop that process. We've got to figure out how to use whatever money we've got and start the project. And then if we can't complete the project, okay, but at least get to a place where you can take a breath. And then whenever you get more money or whatever the problem is, and the other thing that makes this hard is the supply chain thing, because you're still waiting for stuff that we've already ordered and it's not here. We can't get reimbursement till it gets here. And that adds to the misery, if you will, potentially. I don't know. I'm not that familiar with all these projects, but it's turning into a perfect storm and I don't like it. Yeah, but Councilor Hildebrand.
Thank you, Mr. Chairman. I do have to commend Ms. Hall because she asked for $50,000 and guess what? She spent all but $10.
Well, that's a good thing.
That's a good thing.
I mean, I don't mind having, whenever they do their crawlbacks, I don't mind sending them
$10.
$10.
Nope.
But I do get excited when it gets over that $10,000 figure. Because that's money that either, well, and then cost escalations is another problem. Whenever you get these allocations and you got this project done and you think it's going to cost you $50,000, and due to the price escalations, by the time you finally get there, it's going to cost you $60,000. And then you got supply problems and increased fees for pipe or valves or whatever. I mean, it's a dance, and we got to figure out how to tighten the ship up a little bit. We're being very, very sloppy with this stuff, and we need to figure out a way. And like I say, shame on us. We can't figure out a way to track this stuff. Shame on them if they don't do their part. But once again, I want to have a clear conscience, and we've done everything that we're required to do and in a timely manner. And that seems to be a little bit of the problem.
Well, and along with my meeting with these, I think taking the open PO list that is in your packet and going through those and deciding whether that's going to be expended this year or not. Because if you release that back, at least the budget authority gets released off of that. So at this point, because I don't know, we've listed them as expending this year.
Well, you're gonna show us the figures, best figures you have available to you. But is this a perfect snapshot? No. And we need to get a little more clarity in the picture. And I don't know, I mean, it's going to take lots of communication. It's going to take a lot of willingness by a lot of people to get this picture cleared up a little bit. And, you know, I see some of the problems, but we can't make these determinations if we don't have all the information. And we don't have all the information.
The last item on the general fund that I wanted to mention was that as of December 31st, budgeted expenditures exceed budgeted revenue by $6.6 million. it's hard to come up with the cash you need for a budget the next year when you've got that much of an excess expenditure over revenue. So.
Mr. Chairman.
Yes, sir.
I went through some of these budgets and compared what our budgeted amount was versus what we've actually spent. And one of the items, and you can go through in some of these departments, and I've got an extensive list on every page here, but like I said, I'm not going to keep us here till 2 a.m. Because I could real easy. Because what we need to do is look and see where these one item is overtime. There's just no doubt about it. That we're over in many departments. And I think overtime needs to be addressed. Some of them are okay. They budgeted for overtime, they're under. Fire department is $100,000 over what they had budgeted. I think fire chief needs to tell you why. Why am I over?
Is in his overtime budget, is built-in overtime added into that already, or is that part of that number?
I mean, I've got it.
It's going to be all of the overtime.
Page 97. Well, no, I think he's over. No, he's
over.
He's over.
Yeah.
He's over.
And,
But we
and,
also did not give him budget-wise what he requested either.
okay, well, maybe that's it. But I just think there's some of these that need to be looked at as to, are they, how are they going to be handled?
I've got the list.
How are they going to be handled?
To actually distinguish between random overtime versus the budget, the
Actual built-in overtime.
yeah, the built-in overtime
Which I understand the built-in.
would take, it's all inclusive in there though, and it would take some actual manual work to separate those out. And we didn't have enough time to do that before the meeting today.
Okay.
And he really needs that number as he's preparing his budget every year for that. That's a known.
Yeah.
You're automatically going to have that and then build your overtime budget for events and things like
But see, his whole budget, he's okay on his whole budget. I mean, he's at 40-some% of his whole budget, or 45 point something for his whole budget, he's fine. But you look at some of these line items and and I would just ask that, I think, Chairman, if these departments would look at their budgets and see where they're going to really come in, because looking at this item here, there is no room for budget adjustments. So if we've overspent on one line item on the budget, you better find a way to cover it in another line item in your budget, because we don't have it. It's just real simple. That number just tells you right there. We have it, but you know where it's going to come from. It's going to come out of our reserve. That's where it's going to come from. And I think the reserve was put there for bigger events than this here.
Bigger events than just going crazy with the expenditure.
Well, wherever it came from, but we know we're going to receive $1 million, probably more, in less revenue because of what they're doing up in Santa Fe on the pyramiding. That's going to come in next year as less revenue. Inflation is running where it's at. So 23 is just going to be budget for 24 is going to be a bigger problem than what we have today.
Could be tight as a fiddle string.
So,
When the mayor alluded to the increased cost of insurance premiums, we know the insurance premiums are going to go up at the Air Center because the stop loss report is actually going to hit from the hail damage in 2019. So we're expecting that to go up this next year. And then all the vehicle accidents, we're expecting the vehicle insurance to go up too. We ought to have that by March 1st. We ought to have the premiums from them. So we'll know what that is for budget purposes, but it's going to.
probably, I don't know whether it's going to have an increase or not as well. So.
Assuming these figures that we're looking at are correct, we all know that it's best guess. And then you add the insurance and some of this other stuff and a decrease in gross receipts revenue, add another 5 to this minus figure here, easy. And I may be missing a decimal somewhere or a line item or something, because I'm just kind of rolling this through my mind as I'm sitting here. So instead of a shortfall of 6, well, I just call it $10 million. I hope I'm close.
I hope you're wrong,
I
Mr.
hope
Chairman.
I'm wrong too, but I don't think I'm gonna be.
Well, Mr. Chairman, I at least 600,000 one and another million and a million, 3 million, 9. There's over 2 million you're not going to be wrong on. So it's going to be a tough road, but we all can figure it out. It's going to take all of us to figure this thing out.
Yeah, it's gonna take some serious concentration.
Right. I know Mr. Matthews is a task that unfortunately at this point in time falls on you until we get someone new in here, but that person is going to need a lot of guidance as well, because coming in new, they won't have any idea what we're doing here. The learning curve for them is going to be long.
And straight up. Sure.
And Mr. Chairman, I'll look at it this way. Maybe my glass is half full, but for me, it's the opportunity for us to clean up our house. I'm sure, I know we got a lot of things going on out there that maybe we can cut back, that maybe this isn't the right time for this program or that program. Let's get back to the basics.
Yeah.
Let's get our basics covered, the things that we're tasked by to provide our community, and let's do really well at those and then add on from there.
I agree. Thank you. I think
That's just my stance.
so. I think you're absolutely right on the
Trying to be
target.
clear with it and we've got to simplify it for my mind.
Yeah, I think that's absolutely you're right on target, Mike.
Yeah. We'll start the budget process next month.
Yeah.
The first 3 pages on the summary I gave you all today go over the funds. But if you look at the last page, I've gone in there and added the transfers. So if general fund is sitting at 9.3 million and we do the transfers from the enterprise funds, it would bring us up to 12.9 million. The same being said, on the last page, I've gone in and added the debt service payments. We have one for the police vehicles that is due on 8/23. So it's due at the beginning of the new fiscal year, and it's 165,000. So it would bring us to a cash balance of 12.8 million. And those go back to conversation with his. They're dropping in here, where he's talking about the 130% of what has to be set aside for a reserve. And whether we set the 165,000 aside and then another 165,000 to pay that debt for the year. If we're coming up with 2 of those, or if we only have to come up with 1, and that pays that off anyway, I believe. I'm almost positive the police cars go away after this payment, so it's okay. But that's how we're going to go through these sheets.
Well, I understand that we're contractually obligated for the 130%, but the state law requires 125%.
Hess had sent me 2 emails where he had gone in and looked at our loans, and some of them weren't requiring a reserve at all. We do have a reserve on landfills loan, and NMFA put that on there. And so the reserve is sitting there on that loan. But I think several of them, it's just a long email and I didn't get through all of it, so I've not.
Well, unless they've changed, it's my recollection that on your bonds, you have to have the last payment in reserve, but that's not included in your 120 or 25%. If my memory serves me correctly, you got to have that last payment set aside, whatever it is, and generally it's a lower amount than what your annual payments are. But you've got to have it set aside and you just got to account for it. You can't do anything with that money.
Well, those aren't coming through on our statements and most of these are, I think, before our time. Chanel did bring the statements with us, the June 30th, the year-end statements. So you can see them if you want to, but so there's going to be some discussion around that. What that last page shows you are what the payments are going to be next fiscal year. Those are all 24 payments, fiscal year 24 that I've listed there.
Okay.
And it's one payment. It's not the 130 or 125% too. So.
Mr. Chairman,
Sure.
what's your pleasure here? Are we going to go through each one of these funds?
Well, we can.
I just want to know because I got questions. I'll go right to the back and get right there down to the meat. But if you want to go through every one of these, I'll hold my questions. So.
As we hit them. As we
go and just ask questions.
Whatever you all want to do. Whatever you want to do, Mr. Chairman.
I don't want to be here till 2:00, but I'm prepared to stay for a long time. Because we've got to get a thorough understanding as close as we can to where we are, because starting, I got my sheet right here. Starting March, we start our initial review of budgets, our update of revenue projections, position control, and the administrative overview. And then April, we do the completed capital plan, the preliminary budget, and the review of the preliminary budget. So we got a lot of work to do in the next 60 days.
Well, and we've not given notice to the departments yet on how to even start their budget because we've not had the guidance yet on what you all want to do, whether it's going to be a flat, because all they're going to do is the operating portion. Right. So it's going to be, I don't know what operating starts with, payroll and capital are separate. So every other expense in there is the only thing they budget. And then we take care of payroll and capital outside of that.
Well, based on what I'm seeing, I'm not sure we can even do a flat budget.
Then departments are going to have to start preparing for that because flat's not even cutting it, especially when you start hitting the utilities and the gas costs on that. So.
Well, and part of that is due to the increased costs that we've experienced, all the things we do to run. And I'm thinking that I would be, I think, my committee can chime in here, but I'm thinking that if we get by on a flat budget, we'd be very happy, but I'm not sure we can I don't think we can do that because we don't have the cash. We're not going to have the cash available starting into the budget that we had last year at the start of this budget. And expenses appear to me they're going to continue to rise for a period of time. And we got shortages. So and what the number is, I don't know. I don't know. Should we tell them come in here 5% less? I mean, I don't know.
Well, Mr. Chairman.
Sure.
You at least ought to start somewhere, and if it's flat, it's where you start. And then we can look at these things. If I believe flat's where you start, and then we'll look at the revenue side of things and work because these departments don't know what those are. They need to continue to operate on the services that they're providing. And if they're going to cut, they need to say, well, what services we're cutting or what's going to happen to those services so that citizens will be well aware of what's taking place in this community of why response time for something I'm just using as an example or something is different. But I think we need to start at zero or flat and go from there. Remember the old term zero-based budgeting?
Well, the big elephant in the room, immediate elephant, is our ambulance service.
We don't know what that's going to cost.
No, and I'll make anybody in here wager we ain't gonna get by on what we did this year. And I mean, we've got two avenues that we're following on that. One is, what's it gonna take to bring it in-house? And the other is what to get somebody else contracted in for. And if we take it inside, that's okay. That's a decision we make. But you're gonna have a big capital outlay for equipment and an increase in personnel costs, just out of the gate. And so we're gonna, and we can't go out and sell another dozen cars. You know, we're stuck with whatever cash we get in. We can't increase the revenue side of our cash flow because we're just stuck. That's going to be a given based on what we think is going to happen. Depending on what the legislature does, we're going to take a $2 million decrease in the incoming side. That's another thing we'll have to adjust out whenever we start talking about how we're going to spend the money, how we're going to take care of our obligations. And we're in a heck of a mess, in my opinion.
So a good starting place for budget would be that the department's got an operating budget that is flat and that we do personnel where it currently stands.
Yep.
And then we can, okay, that gives us a working spot.
Well, I would also, I think, from what we're seeing, that, I mean, unless it's an emergency person, I don't know, let's not fill any spots. That is potential savings down the road. And that's what we need. We need some down the road savings right now.
And when we start the personnel to make it where we aren't adding and hiring in the middle of all of that, HR's request is that we do a freeze. And until the budget is done, we don't hire any people because it gets a little messy.
I'm glad somebody else is thinking kind of like I am. Which one?
Go ahead.
Well, I had a question. So we do a lot of Quest hiring. Doesn't that cost a lot?
Yes.
To do the temporary?
Oh, yeah.
I mean, is there a reason we can't just hire someone part-time and?
Just, you can find them. They build a list of temp employees that are available to them that doesn't want a full-time job, I'm assuming.
Oh, it would be interesting to see if we cut out Quest completely. I know you need those employees, though, that's the thing.
Well, we may look at it and I can get with the HR about building our own tips.
Because we talked about doing that
Pool.
for Colette, like for the janitors and stuff.
Well, we did it for the guards. We did it for the guards and some of our other folks for the concessions and stuff like that. Yeah, saved a lot of money doing
Yeah.
Okay.
Well, there's some methods out there. Let me go to.
Yes, sir.
Yeah, well, the only thing I would concern myself, we are going to put a hiring freeze. We need to make sure that we don't have critical positions that are on that freeze list.
I agree.
And these departments are going to tell you what their criticals are and don't freeze those.
And maybe they got somebody that's there that's not considered critical right now, that they can move up or move into those critical positions. So we have a net gain of 0 and still cover all the bases that we got to cover.
I was just going to say the same thing. I'll review every position that's requested and make a determination whether it's a critical or not. And if it's not critical, we'll hold off on it.
Yes. Hey, don't give me that. You know, we got several of them in here. I'm looking for this. You understand the predicament we're in? And yes, you're going to do your level best to meet the needs, because we're not only talking about your needs, we're talking about the city's needs. This is critical. Yes, ma'am.
Are you okay with us cutting services then?
Cutting what?
Services.
Well, we'll cross that bridge.
I mean, I'm getting 5 drivers. I either pay overtime or I can't run.
And any, you know, fire, police and dispatch, anytime you have a 24/7 operation, you can't get out of the overtime business. But you need to, and, you know, poor Jennifer, if we get a snowstorm in here, she's got to bring people out there and let them work all night, trying to keep ahead of the snowstorm. I mean, I get it. There's things you got to do, but let's try to control as much as we can. We can't control the weather. And I know you got to have drivers do stuff. I mean, I understand, but you all are in charge of this stuff. Try to figure it out. And if you need some guidance, get with these people and let's get this thing figured out, because it's for our total benefit, not an individual department or agency within the city of Roswell. We're in this boat together. And if you give a little bit, or water can give a little bit, parks may need some additional staff or something for, you know, I'm just using that as an example. And we got to work together to get this thing gathered up. We can't just be doing it, okay, you got to cut $1 million out of your budget. You got to cut $2 million out of your budget. And no, you're not off the hook either. That's not the way to really manage an organization this size. We just need to help each other and get through this tough spot. Hopefully it's a temporary, probably 2-year tough spot would be my guess. If we can get out of it in 2 years, I don't know. Maybe may slip off in the third, just like we had some carryover. We got stuff out there from 2019, right?
I think 2020.
Since 2020. Well, I understand. Budgets are not just from July 1st to June 30th. Because the size of this organization, you're going to have some overlap. I understand that. We've got hopefully some billing, but we'll have late arrival of checks coming in, not based on us, we've done our part. But that money won't show up until the next fiscal year. I understand all that. But right now, my concern is we don't have the revenue to be able to bridge that gap.
Okay, I'm in a meeting.
And the only way we can bridge that gap is internally. Means we all got to work together. We all got to talk. We got to figure this thing out. Because I don't want to cut any services. I don't want to cut anybody's. I mean, we've got obligations to the citizens out there. Those are our bosses. We're just the board of directors or the CEO or CFO or whatever position you want to take. But collectively, we've sat down here, I think everybody in here can tell that it's not a bed of roses by any stretch. The only way we get out of this deal is we all gather up and we all take a team attitude and let's get this thing figured out. We can't be cutting services, Mayor.
Is that why you chaos coordinator?
That's right. That's my title.
Well, all right, well, we got to call you the CC.
But I mean, everybody that's paying attention and we got some entities in our community, services that we're trying to provide our citizenry that they're underwater, and I get that. They don't have any room. They've already been cut to the bone. Okay, I got it. Let's figure out how to help them out. Can we make them well? No. But we can keep them afloat, hopefully. And that's, I'm just one of 10 votes. Okay, I happen to be saddled with this job of keeping the money gathered up best I can. And I'm going to do the best I can, but I can't do it without everybody being on board. Everybody's got to come to the party and you got to sit down, roll your sleeves up. Okay, I'm done.
Let's go through them.
Go. Let's get started.
Just keep going.
Let's go.
On the financial reports, skip all of the next set of funds because they're grants and the money coming in is what they're spending. So we will go to the ARPA fund. Right now, there's almost 5 million in cash. We've got open POs out there, air handler. And then we have 254,000 of that has to go to a qualified category that we can't just use as lost revenue. So the ARPA actual cash available, 7.1 million. Any questions on ARPA? Cap?
How soon do we have to use that qualified? We got another year?
Till 2026, December 2026.
Thank you.
And the lost revenue is ours. We've already claimed that. And so,
Time.
yeah.
We're gonna have to hang on to that as tight as we can.
The next capital improvement, I've added the additional estimated GRT for that, the correction that we're making to the GRT, the open POs, the budget, and then the road shortfall, the other 500,000. So a total of $2,500,000 shortfall for roads. And it leaves it a cash balance of 2.4 million. That is used normally for all the general fund capital items. So any department in general fund that has capital items is what runs through there. We pulled engineering out of there. So strictly what's in there is associated with capital items. Same with it, the budgeted expenditures exceed the budgeted revenue by 2.1 million. Any questions on capital improvement?
This is through 6 months, right?
Yeah.
So it could improve.
Well, and like I said, if revenues stay the same and expenditure stays sort of the same, right? So cemetery is looking at 934,000 in their pooled cash. They have open POs of 65,000. They've asked for a budget adjustment of 51,000. And then the columbariums have been added in there of 650,000.
I've got a question about that. So the 650,000 on the columbariums is, what is that exactly? Do we? What is, I know what a columbarium is, but you build so many crypts.
Right. So we've got the engineering done. We'll be coming to finance and probably infrastructure next. It's just cost increases on that one, but we haven't broke ground yet.
Well,
Pay for the engineering.
But what my question is, I don't know how big the vaults are that hold the crypts.
They'll hold it.
Huh?
They'll hold it.
These are,
I'm not worried about that.
Counselor, these are for cremations.
I know what they are, but
He's a little bigger than the rest.
if the plan is to build 10 of these vaults, I call them vaults, that may be the wrong term, and you've got 10 people.
It's to start out slow. The major expenses, communal shelter and to ease into the actual vaults like you're talking about. Not build out the whole thing, but just kind of get started. And if you build out the rest of them, it'll actually pay for itself. You have some money down here to actually maintain it.
Well,
But the expenditures here are to build the concrete slab and the cover and the place for the cancer and all that and
okay,
infrastructure.
okay.
But we'll be sharing that with
You answered that question. Thank you.
Price of gas is up.
Well, I'm just trying to figure out how to spend 200,000 here instead of 650,000.
I thought it was 850,000.
Well, and are we talking the same thing? Because the project that was approved with the ARPA money was 850,000.
Correct.
And you got that. That's part of this already. you wanted another 650,000 is what you told me to do that. Whether you're going to expend it this year or not, I don't know.
Yeah, we need to take a hard look at that.
We can. That's a 30% contingency in there too, so.
All right, well, thank you for the clarification. Because that's what I was trying to figure out is where we are. I know where we want to go, I think, but I need to know where we are and maybe we already know we can't build the whole thing at one fell swoop.
But I could use guys, I wouldn't like me to stick a shovel in the ground.
Can I, Mr. Chairman?
Yes, sir.
Part of that and part of the reason that this is a lot higher than maybe what you'd see with columbariums that are sitting at the Veterans Cemetery, for instance, is that in order to use the ARPA money, it had to be utilized in such a way for the ARPA requirements. This adds into this, that shelter for the, as the mayor just pointed out earlier, for the services, for the people to be able to spread out and have that if we have another pandemic or whatever. So that's part of why you're seeing it that way.
Okay.
So even though the words columbarium is used here, it's columbarium / committal shelter. So that's a big bite of it there.
Well, I'm just going by what it said.
The columbariums can be added, as you've said, as you go.
Yeah.
But in order for ARPA to be able to be utilized for this.
Okay. So there's some strings out there that I hadn't.
No.
Or requirements maybe.
I'll back up a little more. When the ARPA money came in last year, Joe wanted to use part of it for this. I didn't think it met the qualifications that are required for the categories to be ARPA. So we took all that we could as lost revenue, which was $10 million. The columbarium and the committal shelter came out of that $10 million. So it's part of the lost revenue. So there's no ARPA strings attached to that.
I didn't understand that.
Yeah, and that's not what you all were told because it was later on that we got a little.
Okay.
Let's reevaluate.
Wasn't what you were told.
Yeah.
That'll make you feel good.
Sorry.
Well, let's reevaluate that.
Yeah.
Okay. All right, continue on. I'm sorry.
The museum has no cash right now because they were operating in the red already. So Chanel did enough of a general fund transfer to bring their cash balance to zero because we can't have a negative cash balance on our DFA report. So they end this quarter with a zero cash balance. Their open POs, their 70-30 shortfall and the budget adjustment out there give them $642,741 loss. That has been added in. It's been a reduction from the general fund. So that's why it's orange colored because when we get to the end on my totals, it's not part of my total cash down there because it's being taken care of by the general fund. The same with the zoo. Zoo had $338,000. The only reason that they didn't have a negative cash balance was because they have ARPA money from lost revenue that was given to them for 4 projects. And I can't right offhand name you the 4 projects. Maybe John can. The bear exhibit, the fencing.
Security cameras.
Yeah. Okay, those 4 items. Otherwise, he would have had a negative cash balance and it would have been a 0-2. Their shortfall, and that's why theirs is so much, is because we haven't had to do a transfer because they haven't used all of that ARPA money yet. But their shortfall is at $1,099,000. So their cash would be a negative $1,030,000, which is included in the general fund. They had budgeted expenditures that exceed their revenue by the $795,997, and that's about the total of the ARPA money that he got for those. I think it was either 745 or 795,000 that was transferred to him to the zoo from ARPA funds. Golf is the same way as the museum. They were in the negative, so Chanel did enough of a transfer to bring them to a zero cash balance. Their open POs, their 70/30 shortfall. The budget adjustment that you all approved last month for the $300,000 for the carts that we're expecting in by June 30th, hopefully. And then they asked for another budget of adjustment, and this is a net. So they asked for about $300,000 in additional revenue, but they asked for $600,000 in $660,000 in expense. So it nets to increase in expense of $360,000. So golf will be short $1,312,000, which has been moved to general fund also. No questions yet?
Not getting any better.
Recreation had pulled cash of $1 million, almost $4 million. With the GRT correction that Chanel did, it added another $134,000 to them. Their open POs are $560,000. Their shortfall for revenue purposes was about $527,000. The budget adjustment that they're asking for is $119,000. So they'll end with about $321,000 in cash. We can reduce the transfer from general fund to bring them down to a zero cash balance, but it's not doing them any good to do that. They need funds to start the year. They're also one of them that has the debt expense. The recreation debt service is $1,354,200 for this next year. They're going to be short about $402,000 with their ending cash balance. So that's why I didn't adjust that, because we're going to have to cover it at some point anyway. Corrections is pulled cash, and it has $175,000. The open POs are $121,000. Their shortfall is going to be about $290,000 for a net of $236,730. Their expenditures exceed their budget by $146,000. We're coming up to convention center. Convention center bed fees, which is a different fund from the convention center and lodgers tax. So the convention center bed fee for cash is $511,000. Open POs there are $201,000. The interest payment that's due February of 2023 is $61,000. So the ending cash balance for the bed fee is going to be $247,826. They have a debt service payment due on 8/20 or in August of 23 and in February of 24 of $554,000. So between the 246 that they have with the $554,000 taken out, is going to give them a deficit of $306,000 in the bed fee, but we'll get that every month. So it ought to cover that come the time that the loan is due next year. Convention center is it's a department under lodgers tax. For this purpose, I broke it out. So the convention center itself, the checking account that they have is pooled cash, and it has a balance of 478,000 in it. They've got open POs of 100,000. Their deficit for the year, and for lack of knowing what all that's going to turn into, I did a deficit of 300,000. So reduce the convention center cash to 77,000. The 300,000, I think, is the net loss. If you go down on that one, Chanel, underneath lodger's tax is going to be convention center pulled out. So keep going all the way to the bottom. Yeah, 300,000 is their loss through December. So I just left that on there. But they have enough cash to cover it, and in their checking account, and then all together with lodger's tax, that 81,000 is the total for lodger's tax and convention center together. I know that you had asked some questions, and that's why Justin is here, is to answer some of those. I do know that we had revenue that was collected last fiscal year, but it was for events that were held this year. He's got a total of that. So if you've got some questions.
I think it's an agenda item, so we'll just move on.
Okay. Let's see, that gets us to that. If we go to lodger's tax, they have $1,377,000, open POs of 328,000. It's going to leave lodger's tax at $1,049,000. Roads, the estimated additional GRT above what they're getting is 148,000. They're one of the areas that was getting the wrong percentage, and that's why that number's so small. The correction Chanel did was for 274,000. Open POs are $1,389,000. Their potential shortfall, which have been added into general fund and capital improvements, is $2.5 million. So it's going to give them about 2.25 deficit. That has sort of been covered based on where I've added the transfers from general fund. So it's not added in my total at the end. The GRT bond debt service is a restricted cash. It's got 20,000 in there. Interest is due in February. It's going to leave that at a balance of $1,968. We get down to the Air Center, and what I've done on the next three on the enterprise funds, I listed them as consolidated. So UDAG and PFC are all included in this air fund. So part of the transfer would be the UDAG transfer of the $1 million out of UDAG into the Air Center. This is already done in this because it's just easier to see with no activity really in the others. Their open POs are 3.9 million. They're asking for a budget adjustment of 34,000. That's a budget adjustment request was for a little over $3 million revenue and $3 million in expense for task order on S. I don't.
Taxi way.
Well, but they've got enough budget authority already. They're budgeted at $13 million, actual budgeted at $13 million in revenue and $28 million in expenses. If we keep giving them budget authority, we're going to have to undo that if they don't actually spend all that and generate that revenue, because we can't have negative cash. So what we had done, and we learned this last year with Lorenzo's $4 million at the end of the year, we did 1 month of where we did a budget adjustment asking to increase his expenditures $4 million. And then the next month, because it exceeded his cash balance, we had to asked to do a reduction in his budget. And it just doesn't look good at DFA's purpose when we do that. So because I don't think Jennifer's going to get all of this brought in or spent, I think what needs to happen is what the budget is out there, look at repurposing part of that to cover the $3 million. And revenue really doesn't matter, but in expenses. So, okay.
I inherited it.
Well, I know.
You don't have any more money in petty cash.
I hope not.
I wish.
Where am I at? The interest is due on the one loan out there, and then I added the $2 million in the roof repairs. So it would end up leaving their consolidated cash balance at $1.9 million. The $2 million was received in fiscal year 21 and 22. So at the end of the fiscal year, that revenue rolled back into cash and has been reused for something else. So we have it sitting in cash out there right now, so we can use that. It's just going to take some repurposing of money. And if we do the indirect cost for the air center, and then we turn around and do the water rights from water to the air center, it would leave their net cash balance at the end at $1.5 million. Then we hit consolidated solid waste and landfill. They're sitting at 4.6 million. The GRT corrections adding another 69,000. They've got open POs of 520,000, budget adjustment of 4,800, interest and principal due in June of 568,000. So it leaves their cash balance at 3.6. Also on those, if we do the indirect cost transfers, that would be $1,148,000. That'll leave them at 2.4 million in their cash balance. And then on water and sewer, their cash balance is 3.5 million. They've got 5.8 million in open POs. We've got interest and principal due on almost all of those, which are separate funds, but we've got to cover it with their cash. So it would leave consolidated water and sewer with a negative 4.898 in cash. And then if you added the loans for next year on there, it put them at a $10 million deficit. Any questions or comments or?
One of the things that you might think about doing, I'm just making suggestions here, is let's go through, if we can, I mean, we got a bunch of open POs here. Let's see which ones have actually been started and which ones we can just cancel.
I've got it on my list.
Okay. That's immediate help to the cash flow. And if they've got a project started, and let's get it finished, whatever needs to happen there, but that's a possible revenue shift to the good. Now, there's always more need than there is money.
And then open POs, we have a total of $18.5 million in the remaining PO balance. 168,000 is from fiscal year 20, $1.8 million is from 21, 8.4 million is from 22, and 8.1 is from 23.
We need to find out why come we haven't got those closed out. I mean, I don't know who's responsible, but that'll be their job for the balance of the week to figure that out.
The purchasing agent sent out an email about a month ago telling people to look at your balances and close it out. What I think we want them to do is notate whether they're not going to have it spent this year or how much of it they're not going to have spent this year, because we need to know what isn't going to go out. But it's tying up money.
Yeah, well, we've accounted for the expenditure, but if we can pull that expenditure back, then it helps our bottom line.
Right.
And that's an immediate help. Yeah, and that's a big if. I don't know. We're gonna have to find out. Okay.
So ultimately, at the bottom of my summary, is that at? Total cash is 22 million, where for budget purposes, we started 23 with 57 million. Cash covered in other funds is 5 million. And then budgeted expenditures exceeding budgeted revenue by $29 million.
Councilor Hildebrand, you had a question?
Yes, sir. Thank you, Mr. Chairman. So I'm just trying to understand, like I'm looking at the water and sewer pool cash. And you're saying that they are going to be $3 million. Their expenditures exceed their budget. You took the first 6 months and then the remaining, whatever their budget was for the remainder of the year. Is that how you came up with this $3 million?
The cash amount, is that what you're asking me?
But the cash.
3.5.
You started at 3.5 and you're showing me as principal and interest and net utilization of cash is $1 million, but you've got revenues coming in. Will you not offset that?
But these are outside of the normal revenues coming in. And granted, it's going to be probably a little bit more because I couldn't remember exactly when we started making people pay their water bills.
Right.
But it would have been close to the fiscal year. So if we've got the revenues coming in and we've got the expenditures going out, if we're looking at having to have a reserve set aside, and he did leave, for the loans, these are interests and principal that are due this year.
Right. I see that one's in 23 million too, and
yeah,
100,000.
So those will hit all of those expenditures aren't in here right now because only the interest would have been. The principal, which is a big part of it, is going to hit in June.
Right.
So that's why I picked those up.
Yeah. My concern is or question, not concern. The question is will these numbers, because you took 6 months of actual activity, correct? And then you took what you see as shortfalls based upon where they're spent right now to what they're going to spend by, or what their budgeted amount was, right?
What they're going to spend, not necessarily budgeted.
Right. So that number could decrease, could it not? That when you have in there in blue, currently budgeted expenditures exceed budgeted revenue by 3 points. That number could decrease, could it not?
Yes. Yes. Depending on those open POs.
Right.
And then what revenue actually comes in. This is the blue is comparing budget. All of the rest of this is comparing actual numbers.
Right. I'm just trying to understand what that number really is representing and telling me.
Well, and my whole point on the blue really is, it's hard to have a budget and think you're going to be okay when you're spending $29 million more than what you're bringing in revenue.
Right.
I've not ever done a budget like that.
Yeah. Federal government does all the time, but we can't.
Well, but they have that printing press, and I tried to get Juan to print earlier, and he's shaking his head no.
He didn't have that print, he didn't have the key to the printing press?
I wouldn't be here if I did.
Yeah. Well, I got no further questions except we all have work to do. I think we're all very capable of doing it and up to the challenge. And a bunch of smart, experienced people working for the city, and we all will get something figured out. And
this is
always good.
This is all assuming now the wheels fall off between now and the end of the year.
Yeah.
We had some wheels fall off in the last week.
Well,
we got super glue though.
Yeah.
We'll figure it out. Not gonna be easy, but we'll get it figured out.
The other items you have is an overtime report through December 31st. It's listed by department and then by employee. We have a P-card holder list. It shows you the department who has the P-card and who their approvers are. On any of those where there's not an approver listed, it means that their items don't have to be approved. Which is mainly the directors. But a P-card item does not hit expense. It's not on a purchase order. It's nowhere until it actually gets coded by the card holder and gets pushed through. So it can have a material impact on your budget numbers. If you've got several of them and are spending their limit of 10,000 each or something, it can be a material item. We're trying to get them to code them within the month that the charges are done. If they don't, we're suspending their credit card and they're not getting them back. And so we had 2 items outstanding as of 1/20 for December. One was RPD and one was city clerk.
Uh-oh.
Actually was the mayor. I have to be honest.
Well, you know, she used to be interim. She's a full-time clerk now. First time she's been legal.
Well, and that's another area that we probably ought to look at, changing our procedure and tightening up. How many P cards have we got out there?
Oh,
round figure?
About 85, I believe. But when I started, we had 170 something.
Well, but that's still 85 blank checks floating around the community, and
at about $2,000 each.
I just can't believe that there's names on that piece of paper that really don't need a P card. Now, I understand there's reasons to do that stuff. And there may not be, I don't know. We just need to look at it and see. Because on the weekend, we got an emergency situation going. They need parts or repairs done. I mean, I get it, but they can't come down here and bug you for a PO because you're not here. But if there's a bunch of charges on there that occurred during normal business hours, we need to really look at those things.
Well, we've been trying to get them away from that. We have, with my new purchasing agent, she set them up with Amazon. So Amazon will take a PO from us now. Up until then, they wouldn't. And we would prefer them to use a purchase order. There's just been a lot of changes, and a lot of it is, the way it's been done here for years. So trying to get them to stop is not an easy thing.
Well, it's a learning process. I understand. I mean, we've got to do some fundamental changes in our thought process and get all together and not be in a turf war about our piece of turf because it's all our turf. And we got to make some adjustments. Business practices, procurement practices, we're very, in my opinion, very weak in those two areas. And I'm not going to saddle Mike with that one. I'm waiting until the mayor makes a decision, we vote on somebody else, and then I'm going to leave him alone for a period of time until Mike gets him trained. And then I'm going to walk in with some of this stuff. It's really something. All right. Anything else?
I'm done with the finance if there's no questions.
Okay. We're supposed to have a review of the convention center profit and loss.
Correct.
Okay, here we go. Yes, Councilman Foster forgot he had a meeting this afternoon. Because we do have one item that we're going to have to vote on.
Correct. We can't go anywhere,
You
Council.
want to ask for unanimous consent? We go ahead and take the resolution approving the audit.
Yeah.
I would, I've got high winds about to hit me. My wife sent me a couple of texts.
Okay.
So you want to take care of that? You want to make that a consent item and Mr. Councilor Perry and move on?
Yeah, do we need to discuss it anymore? Are you okay with moving it?
He's got miles to go.
Yeah.
So
It's got
is
to
there any objection to move item 4 up? Convention center back or not? Okay, hearing none.
Make a motion that we send the resolution approving the fiscal year 2022 audit to full council on the consent agenda.
There he is.
Yeah. Second.
Okay, we've got a motion, a second, and record needs to reflect that they're joined by our fourth for the committee. And kind of catching you in a bad place. We're asking you to vote on something you weren't here for the presentation. So if you.
On the audit?
Yeah.
I read it.
Oh, okay. So any questions? Any further questions? All right. All those in favor of approving the audit, please sending it on to the full city council, signify by saying aye.
Aye.
Any opposed? Passes unanimously. Thank you, gentlemen.
Mr. Chairman, I'm going to join by phone and so that I can get on the road, okay?
Okay, sounds good. Thank you. Safe travels.
Oklahoma?
Okay, now let's do the profit and loss of the convention center.
Yep.
We'll ask the public that's still with us an opportunity to chime in.
Chanel will have the DFA report for you, it's information only.
Yeah.
So,
Okay, let's look at it.
We got to do the convention center.
That's right.
Yeah.
I don't know whether we've got a screen presentation or table. Come on up to the front row. Yeah, oh my gosh. Hope you're in trouble.
What questions do you have?
And the reason I asked this was to see where we're at, because of conversation with Mr. Matthews about where we're headed with the convention center. How effectively are we running convention center? What is the P&L side of the convention center? There's two sets of operations over there. One is the facility itself, and the other side I see is the food and beverage side of things. And what are we doing on the food? The one side of it, the leasing or what are the utilization of the space is totally different than the food and beverage side of this thing. So I want to look at the food and beverage so that we can take a fair assessment of what we're operating there and what are the numbers? Because if we're losing money, my opinion is we're out. And there's plenty of people in this town that will take that business on. So that's what I want to look at. I just want to look at the numbers associated with food and beverage. Rent or maintenance, all those kind of things. There may be some of that that's tied to the food and beverage, but it's probably not a big number.
And that's what this is.
Right. And so if we can just look at this of what is our food and beverage cost over there? What's our gross? I don't know whether you got a gross profit number in there or not. Whether it gets tied up in the way you expense it or not, I don't know.
We've got the net loss up there of $300,000.
$300,000. So we're losing operationally $300,000 on food and beverage.
Well, in total.
Well,
In total. How much is food and beverage? Do we know?
right there.
Our
I like those.
between food and beverage is 152, 537.
For food and beverage?
Yes, which is 66.
Total.
Yeah. So you got $152,000 of revenue
Food and beverage,
for food and beverage,
like them so we can see the total.
is what they're saying.
The cost of
No.
just personnel.
Yes. 152.
Our biggest hit on our, is our staffing all the way around.
Right.
Salaries.
But when we're talking about, we have 2 chefs?
2 chefs.
2 chefs at what salary?
I have that number in front of me.
So so we can go down here and look at the expense side of things. And
Keep going.
And all your food and beverage expenses come out of the general supply.
It's 120, I think, is the total budget for that line.
Correct, 120 is our budget. And
yeah,
Another, do our chefs do anything other than cook food? Do they do?
they assist us in the setup and tear down of the facility as well.
They clean, they do inventory, they do ordering.
That's
They
just.
do a lot of the
Ordering of food and.
ordering of food, and then also they roll napkins, clean
Polish
silverware, polish the glasses.
Okay, any of those things that if we were running this, if we had a caterer coming in, we be rolling napkins for them or would the caterer be doing?
or you would charge them for
Yeah, what would we charge for?
it. Right. You could put a fee associated.
That's what I'm trying to say is, can we count 100% of the chef's salary against the 152,000? That's my,
I don't know.
what percentage is what I'm wanting to know.
I don't think you can separate the polishing silverware, and I don't think you can
Yeah.
separate, you can't separate out the inventory for food. You can't separate the inventory out.
But
They're there, they're there.
If we were 100% catering, we would have no inventory. So that would be totally written out, right?
Yes,
We wouldn't be inventorying food.
right.
And then the cooking portion of it. And that's what I'm trying to figure out. At 152 and 2 chefs, depending on salary, that almost takes care of the 152. I mean, we're operating, should be
Let alone
operating at a
the
loss,
additional
especially when you
person.
think of the PERA that we're paying into and everything else that we have to.
Oh, I think that's exactly where I'm headed with this thing,
And that's what I was
that
trying to help.
our expenses are way over exceeding what our revenue items are. We've got not just the 2 chefs, you've got additional personnel that you hire for events and you have to pay for that event process. So if we're just taking the revenue that we have for 152,000, what are our actual expenses associated with it? Hard expenses. Well, not the softs, what I call softs, which is the facilities, you got utilities that you're going, but you'll get that recovered or something in a reasonable charge if anybody, doesn't matter who's in their catering. The rent or whatever, how you come up with something will cover that. So I don't want to look at that. All I want to look at is what's our actual real costs associated with events. And I'm saying.
Catering events with us using the food service, right?
Yeah. And it looks like to me, well, I don't know, we got contract labor, temporary, 43,000.
Yeah.
That's just one line item by itself that we spent that's the budget. First half of the year, we spent 26,000 in contract labor. We've contract professional services, 5,000, contract janitorial, 14,000. Security, 1,300, equipment, 2,800. I won't call it just the computers, but I don't see what the chefs are. I can't see that in this.
The chef,
They're built
salary?
Yeah, they would be.
Yeah, they're built
salaries.
into the salary line item at the top.
Full-time salaries,
Who's everybody?
that's we got 199,000 just in full-time salaries. We're done.
Yeah.
We don't need to go any further.
And Mr. Chair and Councilor, so to your question, is the food and beverage operating at a loss. You have $152,000 in revenue. You have, I think what you indicated was $120,000 in supplies. That's tied directly to food.
So that's what's.
And that's just food supplies. But what you're not accounting in that 120 is on top of that is your salary. So for the first 6 months, just take whatever the chef salary is divided by 2. On top of the 20, you do, to answer your question, yes, it's operating at a loss, probably over $40,000.
Well,
At least,
At least.
just
minimum.
Just if you ran it as a restaurant, the 120,000 in costs should only be 25% of your whole budget. So we should be hitting 480 just on revenue side.
Yeah. And be generous a third.
Yeah, and so that's, as a restaurant, 25% is the maximum you pay for food. And so we're already paying 120, we should be hitting 480.
We're on track, I believe, to hit that. We were on track, close to hit the 480.
Yeah, but 480's got to be in your top, but then you got to have 480 for the quarter, 480 for the 6 months is where you need it to be.
Yeah, that's not where we.
But if our.
It is the budget, not the.
It is.
120 is the budget, oh, not the actual.
85,000 is the actual.
You got to look at that.
So we're at 320 now, and 320 should have been what we had, and we were at 300. So we're 20,000 short.
Well, fake.
Well, what, 340 actually, because 85 you said?
85 is the.
85, so we're looking at
This is-
170, 340. 340 should have been what?
The gross revenue.
Gross revenue, and we brought in 300.
Right.
So there were 40,000 short.
No, we're more than that.
Well,
Right, 152.
in 340 in revenue. Right back up.
Matthew, do you have comments? I just want to throw in that at the end of the day, we cannot provide this service.
Let's look at all.
We cannot find people to work.
Revenue was
Even if we're getting the money, even if we were flush, even if we're flat, we took in everything that we spent. We still got people working every weekend.
Oh, they're working this weekend.
Yeah.
They were working this weekend.
That's what I'm saying.
Have people.
Didn't have staff.
We cannot find people to provide this service in the city. That's why I will be proposing two options at the legal committee. Really, the only difference in those options is whether or not we keep a liquor license or we don't. And we can have that discussion at the legal committee that I don't believe it's fair to our community, first of all, that pays for the services and they don't get the service they provide. And it's not fair to our employees that we're tasking our people with putting on this event at a high level, and we can't do that because we can't find people to serve. And so in my opinion, and I'm moving in that direction, is to get away with the food services and rent and market a very nice facility to hold your event at. And go get whatever caterer you want to get.
I think you're exactly right, but these numbers will support
They'll support that.
path that you're talking about going down. And that's what this tells me. You shouldn't have been working this weekend. That's crazy.
She texts me every Saturday, it seems like, that she's at the convention center working because she cannot find staff.
No.
Justin's working. I mean, everybody's working. We've got a great staff over there and it's not fair to them.
Justin serves a pretty cold beer, I'll tell you that.
I heard he's nice.
I got one this weekend. So I think
So
it's,
thank you for understanding.
yeah, I understand that these numbers just pointed out that we shouldn't be there. And the other benefit we'll get is our local providers have an opportunity.
Well, and so once we decide on the option, and maybe there'll be some other ideas come out of this discussion on what they want to include in option 1 or option 2, then we can sit down and build a set of SOPs, operating procedures and stuff based on that option.
Right. Yeah, you should be able to come up with what utilization of the facility
Yes.
is. You know, if they break something, this is what your cost is going to be if you break it. You get to use it, it's there.
Yep.
But if you break it, and then setting up some kind of reserve fund for equipment repairs that you're going to have to take over time, how you come up with your fee for that. So it's not an exorbitant amount.
Well, I've been contacted this week, and I'm sorry, Mr. Chairman, to just jump in, but I was contacted last week now by 2 different organizations because one of my proposals will be not to charge for state, federal, or local governments meetings. There's a state planning and zoning that will bring over 100 people to town for a week
to stay in our motels, eat our restaurants. And then the State Emergency Managers Association, and they just need a room for 30 people. But those 30 people will be staying in town for a week. And those are just that quick.
Right. And we get a benefit out of the lodger's tax.
Yes.
And Chair, and that's where working with Juanita and working with everybody, we have to show those people what life means. Because those people go back to their communities and they go, hey, they have a planetarium there, they have a museum, they have all those things. And then that brings people in.
Well, and I have to believe that there's more than just us having meetings. School districts.
Yes.
Got to have meetings. And so if we can get the word out that for the state and local, federal governments that will host their event here by providing them the building, then the rest is just, in my estimation, would just be a benefit to the community.
It's a loss leader. I mean, it's going to cost us some to upkeep, but as long as most laws brings people back later, and it's a loss leader.
It's going to be a loss later, but you should see some increase in your lodger's tax, which should help.
Well, that will
help your expenses.
Directly.
Because you get the benefit of those. You get the benefit of that over there before the convention center.
And that's directly, and then 365 days after people coming, we can't count that, but we will eventually get to see it.
Yep. So I think they've done a good job here explaining this and seeing what the numbers are. And I think your job's going to get easier.
That's what I do this for your review. Every purchase has gone on to a PO. I've gone through and tagged with whatever event or went to any. Some of it did go to previous fiscal year 22 outside catering.
Yeah, she said you had some 22 stuff that you got routed for. So.
And that's every GL line except for payroll and insurance.
Thank you.
Utilities.
It's very extensive work and I appreciate it. I'm glad to just.
Justin is great.
Yeah, I have no further questions. I think we're waiting to see.
Any other items that we need to discuss?
We've got the DSA quarterly report. It's in your packet too. They run through the numbers. It's just an information only.
Good evening. So this is the DSA report through the second quarter, which is December 31st. Again, it's just consolidated information on actuals through that time. So we have investments, revenues, transfers, and expenditures, and we also included adjustments. But the report is, the first page is just a recap of the overall picture of that. So I will stand for any questions that you may have.
Questions?
She didn't pull it up there. It's not up there.
I don't think it's on there. Is it?
The packet is up. You want to show, you can pull up the PDF.
Where is it?
Oh, it's already, I already checked one of the. It's on that way.
And pretty much. You're kidding.
It's a page 321. 321, go.
Here's on 270.
Saw it in there somewhere.
You can put 321 up at that corner.
Summary that came out today, because I think it's different.
I'm in the old packet.
Well, it's after.
It's for the audit. That's the audit.
You have another one of these summary sheets?
Summary, what kind of, which summary?
The ones you handed out.
I got mine here somewhere. That is what he was.
Yeah, that one.
Don't take people to move that.
No.
Thank you.
I got it on 321.
Yeah.
You got it. Yeah.
Okay.
And then you've got what is it, the details?
It's a summary behind. So this is the recap and the summary is a little more detailed, but
Any questions? Okay, let's do a quick recap. Doesn't look like to me we have any wiggle room from now to the end of the year. So we need to send out an email to all those various departments. If you're gonna, don't spend any money you don't have somewhere else in your budget because there ain't no money, there's no supplemental income.
Mr. Chair,
Sir.
I think that needs to come from Mr. Matthews as acting city manager. That's his responsibility.
No, he's got it on his list. I'm just going over to make sure that
Okay.
we didn't miscommunicate.
Well, and the deal would be just because they have budget authority doesn't mean they need to spend it.
No. We gotta pull our horns in on this stuff. If there's somebody out there that's coming in with a positive cash balance, I'll buy them a steak dinner. You know? Not fill it to the city. We'll just go somewhere and have steak. Without naming any particular restaurants.
We can do it right out in front of City Hall here. Bring the grill.
Well, I'll bring my grill and bring a steak and we'll just have a little steak fry out there in the front yard. So I think we covered lots of ground. And if we can't get some relief somewhere, we're gonna be negative balance. Or close to it. And so anybody that has any figment of imagination about requesting funds, answer's no. Ain't gonna happen. Not on my watch. Well, it could.
Yep.
You get enough votes on the committee to override the chairman. It happens in here unfortunately regularly.
Stop.
So we will move forward with having departments start their operating budget flat and payroll where we currently stand.
Yeah, and if we can find some savings in there, let's try to do it. Okay, so I guess any other questions or comments? And I guess it's time to go to the public. Got anybody online?
Everybody left you.
We've lost all of the public here except for the newspaper.
Go ahead and go to view who's talking and put it back to all.
that's what I'm trying to do.
Oh, there we go. You got it.
Hey, there we go. Anybody have anything? Do we have any questions out there that somebody may have sent us via a text or email or whatever, however you do these Zoom go-to meetings? Okay, going once, going twice. Of course, we're done. Okay. Thank you all. We'll see you at our regular meeting couple of weeks from now. Yeah, 2nd of March.
Thank you, Mr. Chair.
Thank you all.
Half a day tomorrow.